All right, welcome everybody. 6:17. It's Wednesday again. Wednesdays seem to be a pretty fun day to do these webinars because there's always some sort of movement. All right, so we'll get rolling today. I'll try to keep it light here with indexes, just because we don't really know what's going to happen in the next couple days here. We do have Friday off here, but I'm kind of getting the bounce vibe here, and we'll see. Okay. So to kind of kick it off here, I do want to go over both, bull and bear scenarios here, but I kind of think that, excuse me, we're seeing like a flat kind of correction, and I've mentioned this before in the posts, but it looks kind of weird, but I still think that we're seeing something like this. So it stopped at point, the 0.995 pretty much. And this is just for Nasdaq. The S&P did something a little bit different, but here, let me clean out the junk. This is from last week. But it's still sort of the same. Still kind of the same same sort of distribution here, where it stopped at the 0.886. I mean, I would say that's common. It's a very common reversal point. But when you're looking at these types of corrections, or at least like these types of patterns, what I typically see, well, not me personally, I guess, we see a lot of these. We see a lot of these types of movement. Just a standard, Elliott wave, wave flat correction. So what that typically means is, two waves of ABC. So you're kind of looking at it like, or actually have it pretty set on my other chart here. Yeah, so today was kind of screaming that there was going to be a sell, but we didn't really know that like 2 days ago. So I was kind of thinking that these guys are going to make another new high again, and that's just kind of how it was going to work. But basically, this is kind of how this pattern looks. And even if it does kind of go back up and then make a new high, typically you don't really see, it doesn't really last long. But still we ended up closing that gap today. And we ended up doing a bunch of other stuff to screw the general trading public. So back to the, I guess, kind of cleaner chart. So this is sort of the overall kind of view. I want to do just a couple of, excuse me. Yeah, I don't know what it is about talking. Maybe I just need to shut up. All right. So I'll get some of this stuff out of here so it's a little easier to read. But long story short here is that this sort of ABC pattern, like I just showed, that's sort of the high level view. It still doesn't necessarily mean that it's short-term bearish. I actually think we're going to get a bounce here, but I don't think that this pattern is dead yet. Sorry, not the pattern itself. Let me explain. I don't think that this little round of selling here is quite done, but then again, I always seem to be surprised whenever these guys bounce it and never comes back. So typically what you would see here, you always want to try to start out with like a A equals C when you have this sort of pullback. And the other thing you want to look for is you want to look for a pullback here, or like where's it gonna rest. So we went right through this 0.382 level. So what that typically means is I don't think that this is impulsive anymore. I think that some people were drawing here. So some people were drawing things like this. I'm not sure if Alex was, or any of the other guys in the session team, but pretty much what they were showing is like, okay, bounce on the 0.382, and you get rolling that closes the gap, that kind of thing. But anytime you see like a pierce of these of these fib levels in a major way, that's typically a test of buy support. And how you want to read that is you then kind of want to see what the extension is going to do. At least try to give yourself a good chance of success here. So we actually, what was weird about this is we saw, if I zoom in and go like the 5 minute here. So if we zoom in, you can kind of see here that we had like a here we go. So like a 5 wave down, and this was actually pretty clear. This was what I thought was at least, I guess you could say interesting. That's part one reason, because typically when you see a 5-wave impulse down, that means that's usually the start of the C leg. That big giant C leg down here. But the first wave down is always the most difficult to forecast, just because you never really know when it's going to stop. The measurements all kind of key off of where that bottom is, but you always see this ABC kind of move up. So last night, this is why I ended up posting, like, we'll probably see higher levels tonight or tomorrow, that kind of thing. And then, for the Fed day, we'll see a little bit more selling. But this is sort of what I was thinking here. But today, what was interesting is we ended up seeing this, this kind of this consolidation pattern that, was resembling a triangle. And typically when you see that, that's usually, it's just continuation. So for, like, I guess if you're zooming out and you're looking at, if you're zooming out and trying to make more sense out of it, you could draw some more lines and say, okay, this kind of resembles a triangle, but it's still a continuation pattern. You typically only see, let's see here, like if you're counting waves, excuse me, if you're counting waves, triangles typically only happen at like wave 4s, or it's usually like a means to an end, or it's a continuation pattern. And it's kind of difficult to figure out which one it's going to be, but typically you can kind of have a pretty good guess where it is in like the higher level pattern. So that's why I was a little bit more confident today that we would see some sort of selling, and then ultimately close that gap, because we really, just sitting right above it all night. And I'm like, it's not going to last long. But how far down it went, that's something of note. So, Jake, I think this is a question you had asked me earlier today about whether we just saw like a wave 2, and I think that there's some sort of meat to that here. So, like, this is a really, really weird kind of wave pattern, and I kind of think you might see something like this, because this would essentially, like, finish up that finish up this sort of pattern. It's usually 5-3-5. And I don't want to bore you guys to death with like all the wave theory, but what that means for you is, you'll probably see a little, maybe a little bit higher of a retracement. Again, like, there's a lot of buyers trapped up here. So you see all this buy delta, you're gonna get a lot of energetic recovery, I guess you could say. But that's probably by design, from whoever was doing all the big selling. So you can definitely see a lot of high volume here after futures open. So this is definitely people questing for their loot back that got trapped today. And you typically do see this after like big Fed days, or days in general where you have a lot of volatility, a lot of pretty fast movements. So just, I guess, to kind of finish that up here, this is not a guarantee whether this is like a wave 4 or not. This pattern is very choppy. And I don't really like it. So all we really need to know here is where these extension levels are. So let's clear out some of this stuff. So if you were planning on some sort of trade, there you go, tighten that up a little bit. What I would think here is look at the 50% retracements, and then also look at your 0.618 retracements. So let me just mark the potential levels here that you could see a retracement to. Here's the 50. Okay, and then I'll get this out of the way. So I guess technically what you're looking for is if you do have a retrace, something like this, you could have a continuation tomorrow. You could even have, maybe since, let's say you make a lower low, you could have something sort of like this where it becomes like a large ending diagonal. And this is just one scenario to prepare for. But I kind of think that tomorrow you might see some sort of bounce. So even if you get some sort of megaphone kind of pattern, that's it's not necessarily a bad thing. It's just less reliable. But anyways, you could see something like this. Let's say it's not saying that this is going to happen, but it's kind of like we're mid pattern here. Seeing as how the week is ending tomorrow, I don't know if we're going to see this. I'm thinking that we might see maybe something that starts with, or maybe something that starts out the retracement. So if we don't get this lower low, what we might see here is you might start to see this this gradual sort of recovery. Now, if this ends up being like a wave two, and then we end up getting a much larger sort of sell-off, kind of like I was showing in the other chart, then that's where I would look for it. So your tradable range here is pretty much here. Let me get all this stuff out of the way. Pretty much, it's a wide range, but you would be bullish above, and you would be bearish below. But I think that there's been enough buyer's traps where you're going to get a lot of like attempts at continuing to buy up. The bulls just couldn't get any traction at the end of the day today. But yeah, that's kind of what I'm thinking here, is that you could get a truncated sort of wave count. That's been happening a lot recently with the crazy bull market. But this is I would say your best case scenario bullish right now. Since we did kind of violate a fib level here, or a key one. I don't think it's impulsive up anymore. I think you're just looking for more of like a corrective wave. I would say there's another scenario that you could fake everybody out. Let me zoom in out a little bit. Oops.
Are you saying you think we've topped?
I think so, for a short period. You're still pretty high, pretty high up with valuations here. I don't think that you're going to see. I don't think you're going to see a lot of more headroom up here. The second possibility is that this could just be like a low wave count sort of thing. Here, I'll draw it out so it makes sense. I guess as long as it doesn't really go beyond, like, let's say 29,400, something like that, or maybe a little bit lower, it's still it could still qualify as a like a wave four, and you still could see an extension up here. And you can draw it a couple different ways. This is why sometimes Elliott wave can be like confusing to some people, because it can be subjective. But if you've been doing it long enough, you can kind of figure out, like, what's pretty much what you might see here. So, like, there's a bunch of different ways you could count this. You could have some overlap, but this I think is probably the most extreme bull scenario here, where we have this ABC up here. Sorry, I can add contrast if it's not clear, and I know I'm probably going fast for this, but this is, I guess, what I'm saying is that if you do have a pretty crazy bullish scenario, I would say a breach of this 0.618 level, or a breach of, well, not or, I got once that gets breached. And something I've been noticing lately, they tend to rotate their tricks. But what I've noticed recently is the bulls, like the sellers have been letting the bulls kind of go through a certain level, and then wait a couple minutes, and then they kind of jam it back down. So you might see something like this, and then after 5 minutes, 20 minutes, something like that, you can see a rejection. So it's very easy to get stopped out if you're short. But then like, you had the right direction, but the wrong levels for hedging or protection. So that's just something to be careful of. I've been seeing that, I'd say, probably over the last like 2 months. But just when you get wise of the tricks, then they change them up, But okay, so I would say the second alternative. So those are kind of like the bullish counts. Jake, your question, thinking about topping, I'd say, man, every time I say that, it gets me into trouble. So I would say there's a higher probability that we have topped, at least for this sort of leg here. I don't think that we've hit like ultimate market top yet. I think that this sort of wave 4 correction, if it ends up being correct with the analysis, then we should have, like, once it hits bottom, you should have another rip up, that kind of thing. I could easily see like a 31,000 or something like that for the Nasdaq, maybe even a little higher. It just depends on what happens. We're kind of out of Iran war news, so there's really no big catalyst other than aliens, landing on Earth or something like that, and coming with big bags of gold, or who knows. But yeah, so that's sort of my take on it, Jake. So I would say the very, very short term bear scenario is we could have a continuation tomorrow. I think I already said that, but there is a case here for a pullback like this, and you can just see like a pretty long tail on this guy. Like honestly, it seems a little too easy. After hours, we're already up 0.33% for Nasdaq. I don't expect that to last long, but if they do continue to rip it up all night here, then highly likely you'll see some sort of maybe next week you'll see a pretty big downdraft. But anyways, that's like the short-term bull and bear scenarios for the indexes here. It's very similar for the S&P. Just the measurements are a little bit different. The S&P is the one that took a little bit more of a digger today. So with that sort of retracement, it hit on the 50%, which that's a pretty pretty deep cut, but I still want to see if they can actually get it up to the to where they had a lot of this buy delta, which I think they will. So that's around like 75.25. But you just kind of draw a box around it where anything below is bearish, anything above is bull, and anything in the middle is tradable, at least if you're paying attention. So that's kind of the take here on the S&P. Anything below, or sorry, like the 7,400, I think is going to be a problem. We did get a decent bounce off of the 50. That's what this purple line is. But I kind of think if you're on the back half of a correction here, you've also got this pretty monster looking head and shoulders pattern. So the last thing I'll say about the indexes here before do questions or move on or whatever is if you are looking to short or you want to do some fun shorts, what I would do if I were me is just in case this ends up actually being correct, and you do see some sort of wave 2 and then an upcoming big wave 3, those could be very, very profitable, especially for short. So typically what I would do in these sort of situations is like, this is the sort of trade setup that you look for, because it really only sets up maybe once or twice a year, where you get a really, really good short opportunity. So what I would do, or at least what I'm planning to do, is I'm targeting this zone here for adding any sort of like longer term sort of short plays. And what I mean by longer term short plays are puts, I would say, like let's say 90 120 days out, that kind of thing. That gives you a lot of flexibility, but also too, if you do catch this wave down, and if this is correct, then you could even just the delta itself and the theta, sorry, not theta, the theta will be reduced because you have a lot of time in the contract, but the increase of volatility with the VIX, that would be something that's pretty fun. Just the volatility increase alone, it's sort of designed to, I guess, reward people that short the market, because they keep getting their butts kicked whenever, just in general, with in bull markets. So like the risk reward is not great for longs, but it's really good for shorts, but it's always about timing. And the shorts, like if you buy shares, you don't really have to worry about it, or like short shares, you don't have to worry about it. But if you have like put options or whatever, if usually when they drive up the market, the VIX goes down, so you get options that are cheaper. But what I'm noticing is that put options are actually really expensive right now. Even so, like 0 DTE today, I was looking and it was $400 for at the money put option today, which they're typically much less. Usually below 200 or 250, something like that. So that just tells me that market makers are trying to skew, even with like volatility calculations and things like that. They're still trying to make money off the spreads and the theta burn while they can kind of keep it up here. So that's at least my observation with it. So another thing you can do that I find is a safer option. It makes you less money, but it's a safer option. Is to do like put spreads. So if you do, let's say, like a 10-point put spread, and you do like, let's say, I don't know, 90 days is probably a little too much. Like all you're really trying to do is, let's say you have like a longer term short play, like just straight put options, and then you have like a secondary short play, but with a smaller time window, and that's really what I would do with like spreads. So some things I've done in the past is like I've taken out like a 3-week put debit spread with like a 5-point delta, and I'll do like 10 of them or something. Just something, it's not super expensive. Like I think I took out some call spreads today, but I gave them like a week. So I'm kind of expecting that even if we do get another leg down by a week, we should be back up to back up here. But it could be wrong, right? Could just keep sliding off the cliff here. But it's not a lot of money that was upfront. So I think like the 5 debit spreads were like $1,000, something like that. But the payoff could be a lot more, but it's only like a 5-point spread. So I guess what I'm saying here is, if you are planning to, do your own version of a big short, you have a couple different options. One of them being, long-term put options where you just kind of set it and forget it. Another one is, you still want to, like, it's going to be really hard to not take profit on your big long-term shorts, especially if, let's say you get like a wave 4 that kind of just sits around for a week or two. That's really, really difficult. But if the VIX is still elevated, it's probably a good idea to take profits, but that's what the spreads are for. So if you do, let's say 3-week spreads, 6 weeks, 9 weeks, that kind of thing, you'll still have some short exposure, and you could close those, take profits as or like cost average down. Sorry, not cost average, but you could, you know what I mean. You could do something like that. Anyways, hopefully that makes sense.
Yeah.
So sorry if you can hear talking in the background.
I have a question.
Yes.
So if you were gonna time, like, can you, I don't know, can you talk about any confluence with watching the VIX?
Sorry, one second.
Okay.
I got dogs. Oh my God, crazy town around here. Anyways, so sorry, Jake, could you repeat that?
Yeah, I've been looking at, I use like gamma heat maps and stuff to also help me, and they were all showing negative gamma today below spot price. So it wasn't a big surprise that we dumped today. I even had puts and just unfortunately went to lunch and had them on a sell order that closed in profit. Not enough for me to be thrilled today. But
that's why you never eat lunch, Jake. It's
exactly. Yeah, staying.
I had to go to the bathroom really bad. I couldn't
hard.
leave the desk. Sorry, I didn't mean to interrupt. Go ahead.
No, it's short dated options do that to you, but it'd be nice to not have to worry about that. But you get insane returns from those. So I think I'm gonna stick to it. I'm just wondering if we can use the VIX at all, because that, like, if there's any confluence with the VIX or anything you can point out there, like that really does help. I think, the VIX kind of acts as a leading indicator in some senses to when we do see that big volatility move, equities dump, and it's like really subtle.
Yeah. So I think it's kind of funny because I was going to mention something about this. Oh no, wait, no, I did. About the VIX. Like, oh, it's such a surprise. The VIX is, it's not positive yesterday, with with the Fed, the Fed news coming up today. Like everybody expected it to be rates held flat, but it's still the next Fed guy. They're dissecting everything he says. But you can kind of see that we had a massive spike today. It's still sitting at 12%. I think that's a pretty good indicator that there's a lot of people that have instantly switched to fear mode. I'll be honest, like I've never been. I might maybe ping Susan in a discussion. She's really good with. She's got a VIX strategy that she uses to manage tail risk, and she's really good with options. You might want to ask her about that, or I can help facilitate.
Sure,
but,
be great. Yeah, I didn't
Yeah,
know she's still active. Okay.
yeah, yeah. So so I would say like I'm not as experienced with the VIX and using that as like a front running signal kind of thing. I actually use more of like the Dow. But I'm sure you guys have all heard that before. Like the Dow excuse me, typically leads, but in this case, I think that once you see like a big dramatic spike, and then you see this sort of everything gaps down, that kind of thing. Usually, you see, usually you would assume that like the smart money kind of traders, they're all picking up puts, while the VIX is pretty low, but they're doing like longer term puts. Um, and I would say, just looking back at the Nasdaq chart, um, when we had this big gap up, that kind of thing. But then as soon as you started to see like the volume at night, or I mean, you can see this is a pretty big brick of volume, sell volume. That's where I would have, or well, yeah, I tried to tell everybody like, hey, lots of volume. It's time to take a look at some of the some puts or something, or maybe trim up some longs. And you can kind of see that coincides, um, or it doesn't really make that much of a difference in the VIX. So we even got like a little bit of a pullback yet. So I would say the signal that I typically look for is not necessarily the VIX, but I combine that with like Elliott wave and like retracements and all that sort of jazz, to kind of establish like where I think is going to be a good place to enter shorts. But everybody here probably knows that you can get roasted when you when you enter shorts way too early. But the reality is, after so long, we have so many rallies and little dips and stuff. Like there's only so much inventory. Like
Are you using the Dow? Or like, what are you doing to, can, if you yeah, want to show me how does that look as a leading indicator? That's helpful too. I
um,
haven't really used it, but I've heard Alex talk about it quite a bit.
yeah, so that's a good question. I guess the unscientific way
Like
of trying.
I'm definitely, I guess the tone I'm trying to give is I'm looking to get more systematic and disciplined about my trading. Elliott Wave, I love it. It's great when it works. When it doesn't work, you're like pissed because it can go wrong so many different ways, you know.
It can, yeah, and honestly, I think it really just boils down to experience. Like I've been doing this for years and years and years, and at the beginning, you make rookie moves, rookie mistakes, but then after you've practiced it and kind of, I wouldn't say nobody's really a master, of it, but like once you've kind of seen things to look for, you kind of like adjust your wave counts, and that takes time to develop. Jake, you can send me a DM, or we can talk about that at a later time. I think there's some easy things that you can do to improve those skills a bit. So when I look at the Dow, a lot of the things that we had seen before, um, like I might have mentioned this like 2 or 3 weeks ago, where the Dow was shedding pretty bad, and the Nasdaq just wasn't at all. But we were also getting really close to this upper trend line. So if we look at the daily counts here, this to me, like when you're talking about chart patterns and Elliott wave and stuff like that, this to me is clear as day. Where you see it, just massive amounts of volume here, but to me, this is a very clear ending diagonal, and the Dow is the one that represents this sort of pattern the best. Where you look at something like that's pretty messy. I'm sorry. If you look at something um, like the Nasdaq, you can still see it, but you usually get breaches to the upside, so it's not like super reliable. Like I think I had shown a chart something like this a couple days ago, but you can see that you've got all this junk above it. You also got like a weekly sell signal, but in my opinion, it is all about the volume. And once you start to see that volume increase significantly, like with the Dow, even though there's a lot of buy volume, it's kind of weird. But you could, sorry, there you go. But I mean, it's still, that to me is kind of like, it means two things. It's like maybe there's a sector rotation coming up, but also with the high volume, maybe it's just maybe it's just more people getting in the market. But typically, high volume and low VIX with the Dow coincides with just selling, or really, when we're at the tops of these patterns here, and you start to see like higher volume rejection candles, that could just be like a cycle change. So we don't quite know yet if this is really like the turn, but that's kind of why the bulls have conditioned us to just do nothing but buy, over the last couple months here, because people just think that markets never go down. Well, again, this is still just my opinion. There's a lot of new people in the market these days. A lot of, especially with like the hype around SpaceX. And I heard from one of my friends yesterday, his wife is all about buying SpaceX. I'm like, whoa. Can't give you advice. However, I could say probably wait until September. Wait until all the IPO holders dump all their shares and stuff. Right now, it's just a speculative kind of mess. But usually when you have those like high volume IPOs and stuff like that, you get a lot of just moving around the markets. So I don't know if I quite answered the question. Hopefully, I at least gave a little bit of insight. But it's like the Dow typically leads, and how I interpret that is usually by the volume. So we had the kind of this big dip here, and we really didn't have much with like the Nasdaq. So if I go and I just do like an hourly, we had, sorry, jumping around here. Yeah, I mean, like we had a little bit, but it wasn't the same distance as like the Dow. And there was also a lot of buying at random points. So you can see big rejections here, that kind of thing. But this is still a long-term sort of trend line. And now that this has been breached, that's a sign of weakness as well. So I kind of think that we are seeing this head and shoulders play out. I don't know if this is another scientific thing or not, but I typically see a lot of like with major tops. I think I see head and shoulders more than I see things like double tops, or cup and handles, or things like that. I know there's stats on that somewhere, but I don't have them. It's gut feeling. Hopefully I answered your question, Jake, or at least tried.
Yeah, I'm trying to get better at watching volume. I don't know. It definitely is one of the best ways to gauge what's happening in the market. Like yesterday and today, you could just, if you watched like on a 1-minute chart, or even the 3-minute chart, you could see where buying and selling was happening, and where you just watch the nature of the candles as they are going up, they kind of get smacked down, and it's just characteristically different behavior than when you're watching buying.
That's right. Yep.
So you kind of just need the screen time, I think, to be able to understand it for sure,
right.
to know what regime you're in and where it's going. But yeah, I mean, any tips there? Happy to take them.
One of the things I would say is, let's say you're day trading. Okay, so if you're day trading and you're in the let's say the 1-minute charts, it's almost like you have to have the 1-minute chart open, because that gives you the best insight for just how things are moving. I know it sounds ridiculous, but if you're a day trader, you know what I'm talking about. Pull up the 1-second chart, and you can actually see like the pulsing of buys and sells. And let me see if I can show you real quick here before I can get or before other people fall asleep. But and we can also talk about this here in a brief moment. But it's not very active right now. But when you look at a chart like this, and you kind of match it up here to the 1-minute chart, you can kind of see that all this buying here, like right at the end of the day, or not end of the day, like right when futures launched, you've got this. Typically, you get this kind of smackdown kind of thing, but what you're looking for are these big continued buy spikes. Sorry, getting a little overlap here, but you can kind of see how like this is a bullish. I mean, obviously, you can kind of see how it rockets up here, and you get that direct translation in the 1 minute. But what's I guess what this is the most important for is to kind of gauge enthusiasm for buying. So like right now, just off the cuff, looking at futures right now, this looks like a developing sort of triangle, and you can kind of see that like, well, I wouldn't enter yet because you've got you've got some higher volume tests of buy support, and you can kind of see these just big random like sell spikes here. You also just saw another one here, so it's over the last 30 45 seconds, that kind of thing. You do see how fast these things move. So it's all these patterns are fractal in nature. So in my opinion, at least, once you're seeing like a triangle like this, you can kind of see, okay, it's probably topping out for now. You might see this triangle break down and maybe test the VWAP, but you'll have to watch for a lot of these different buy spikes here, and that's where you can kind of see that there's interested buyers that are trying to move the market. Hopefully that makes sense, but it's a completely different world on different time scales. I'll say that. And most of the day, when I do trading or stuff like that, I always look at where are we in the grand scheme of things, because every different level, every different time frame has a different sort of significance. So this, like for example, this blue line here is that's the 21-day moving average, and you can kind of see that usually you'll get a lot of volume or a gap up or something like that on a Sunday to get above the moving average. But another thing you see is you'll see how much defense there is at these different Fibonacci levels whenever you get a breach. So you can see how the cursor's lined up right where they blasted it through. There was enough sell volume there where it kind of likely it's spooking them, so they're going to kind of back off a little bit and see if there's any rejection. So they won't deploy a lot of capital. The volume is a little bit lower, but highly likely you'll get this 0.618. They'll just probably accumulate a little bit more first before they drive it up a little bit more. Does that make sense? Or did I go fast? I probably went fast.
Yeah, no, that's fine. I only get the 1 minute on TrendSpider. I don't know why they don't do 1 second, but I also have a trading view. So
sometimes you got to pay for like the extra tier. Like I know trading view, I think you had to do the top level for it, but I don't know. They also told me that I was my year in review. I was in trading view for 310 days. So I'll tell you, it's always open all the time. So I do it for you guys. Anyways, always at the helm. If you ask my wife, she probably gets pissed off that I got all these alerts firing in the middle of the night. Anyways, okay, I got to speed up here. Okay, so let's do the indexes, guys. Any questions about bull bear setups? I think overall there's pretty good opportunity for a short coming up here. I think symmetrically this might be a little bit early. If we do get some sort of let's say, it's kind of hard to explain. You know what? No, that's going to be confusing to you guys. I don't want to do that. Forget I said it. All right. So if there's no questions or anything, I'll pull up the rest of these guys. All right. So let's look at the yield. So the yield, I think I was talking about this last week, where the yield is super important. With all the refinancing that the U.S. Treasury is trying to do, with all their with all their new bond issuances, it's very important to keep the yield down. So that's why you get a lot of rhetoric around, what I mean, like trying to keep the yield down for like lower rates at the Fed. But what people don't quite understand is that you can't just lower rates at the Fed and then like that's it. Like the bond market is going to price in whatever premium that they decide is worth their dollar. So I've said it before, bond traders are the best in the business, and the yield is accurately reflecting, like, not consensus really, but it's accurately reflecting like what the opinion is and the sentiment is out there amongst the bond traders about how much premium they want for holding this sort of debt. So let's say we spend another $1 trillion in the next budget. I bet you the yield goes up. Just that kind of stuff where All that stuff on the macro level is related. So, the fact that the yield actually got up to 4.6 just a few short weeks ago is quite telling. I think that yes, with high oil prices and stuff like that, I don't think that this Iran war stuff is going to be over anytime soon. I think somebody's going to say something or do something stupid, and it's going to, the Strait of Hormuz is now going to be a strategic choke point for energy supplies around the world. I think it's going to be a longer term kind of trade. And I'll talk about that here in a second, but the yields should reflect that as well. So this is a bullish pattern here, this little sort of descending wedge. And I think that, since the bull target one was already hit, my ultimate target here is like, 4.78, that kind of thing. I think it could definitely go higher, maybe like 4.9, but anything after 4. Really 4.3 is terrible for equities. And I just have no idea why equities are staying up for so long. I think it's just, you got to, it's end of the current bull cycle. So there's a lot of excess. There's a lot of crap in the system that needs to be shaken out here. That typically happens at the end of the cycle. So anyways, I think, the higher yields go, the greater the significance or the greater the correlation with, equities taking a big dive is going to be realistic. All right, so gold. So gold, I don't know why I said it like that, but so said it yesterday, I think Monday as well, where it's like you might want to take some profits in gold. Got a pretty good dive today, but it did recover. So there was at least like a close the gap, and I still think it's probably going to head a little bit lower. So if we look at something like this, I mean, I hate to hold long shares of gold here if it does keep kind of going back down. But this is a massive candle of massive candle for gold. Excuse me, for gold, for all this sort of sell volume. So I think a lot of futures traders are probably shaken out here today. So you probably get some reflexive buying, but I still think that you'll probably get some support pretty soon, maybe 4,200 for interim support, maybe for a quick long. But overall, we're still kind of seeing this slow, steady kind of deterioration here in price. But I still think it's a longer term buying opportunity. And I mean, you guys know I like that fund GLDI. It's got a massive dividend. But for me, it's like this pattern can kind of flip either way. Like right now, I'm showing bearish, but this could easily stop. Let's say we get a pullback here, and then you get some sort of big couple days here to get above this 250-day moving average. What's going to be interesting here is if the 50 does cross over the 200, kind of like that death cross. But with inflation and all that other good stuff that comes along with it, I just think people are going to eventually flock back to metals because there's nothing else. I mean, sure, Bitcoin's a little bit low, crypto's a little bit low, but I still think it's got another leg down yet. So there's really nothing, and all the other sectors are super high, even like utilities. So I think there's just not a lot of opportunity for alpha around the market right now. So some bloodletting is probably going to be a good thing. Silver's got the same sort of story here, but I think it's a little bit further along than gold. In this sort of pattern, you get like this sort of continuation here. This is like the last leg, where let's say you get down to like 55, that kind of thing. Like I'm definitely a buyer for like SLV, or if I can find another fund that's got some nice dividends or something. So yeah, that's kind of my take on it with metals. I just don't think they're getting a lot of love lately, and they should be. All right, so oil. This is the elephant in the room. So yeah, we had a lot of news around Iran and everything like that, but we're actually at a pretty significant like extension level here for a pullback in price. You've got a big buy here, but what's weird is that gold is not quite cooperating with its normal correlations, and it's just been kind of weird. And I think oil and natural gas have kind of been disconnected like that. So usually it's like yields and and metals are kind of at odds, because yields. I mean, it's essentially paying dividends, but metals don't really do that. So it's kind of weird to see how those prices interact. But I think that it's getting pretty close here, where you should see some sort of bounce on the 50. Or sorry, this is the 200 daily moving average here. This turquoise line. And I just think about it globally. It's like we're very pretty much danger close with with remaining supply. So supplies are still going to be tight. Gas prices are still going to be high for a while, and probably going to be high for quite some time. We'll see, unless there's some sort of presidential decree or taco trade or something like that on it. But I still think overall here you're going to get you're going to get probably another scare here with oil. We'll see. All right, natural gas. I think this is a bullish kind of pattern. Gas has really just been lazy. It's got the same problems as oil. A lot of it comes to the Strait, but I think we have a little bit more of it domestically. So it's probably not as big of a supply concern. But anyways, it hasn't really been doing much lately. So I want to try to get out of my lungs for natural gas, just because I kind of feel like September is coming up. There's probably going to be a dip before there's another sort of supply shock. So we'll see. Bitcoin. This one's kind of weird. Longer term. It's a longer term. I still think we'll probably see a little bit more of a retrace here. We do have some sort of like wave 4 action going on, but I don't really know if it's crested yet. I think you've got this point of control for the whole range where you're starting to see some more sellers load up. I mean, this is pretty nuts here. When it comes to volume in Bitcoin, but the first lower low, I think this is probably the capitulation leg down for crypto. I would buy at this like 58,000 kind of level. But that doesn't necessarily mean that it would be a long-term kind of buy. I think there's a possibility that if equities do take a big dive off a cliff, you will see some sort of response in like Bitcoin and some of the other cryptocurrencies where you could see this final sort of like major capitulation leg. But this is like, in my opinion, it would be like a multi-year sort of capitulation leg. So if we do get to this sort of final bear target here, I'm going to load up a lot of what is it? BTCI. This is the guy that's got a lot of nice dividends that pay. But you can kind of see here that this pattern really resembles like a kind of a cascading wave down. But for people that aren't really like chart nerds like me, I don't want to assume that you guys can see what I see, but it's you can kind of see it's still been in like a major bear market, and typically you see that last little capitulation move down before then you get the next couple of years where it's then you get all the bulls that come out. They're like, oh, it's a store of value, and it's it's not just computer code, it has a name or whatever. You know what I'm saying? All right. Stocks. This one continues to baffle me. All the capital is concentrated here. I think if we do get some sort of like higher retracement here, a lot of it's going to be focused in stocks. I still think you'll probably get a little bit of higher high, but not today. I mean, you can see this complete parabolic sort of move. This is it's roasted a lot of shorts, but if you're looking for like an epic short, when the bubble does burst, I've had some friends before that like in crypto, like they would just set some limit orders. So let's say, for example, like at the point of control, let's say 565, they'll set some sort of like sell orders, that kind of thing. And then as it kind of goes lower and lower, they'll add more and more. But still, that's only if you can actively manage it every day. Nvidia, this one I think is probably going to take a bit of a jump up here, but since it did have this breach of this 100% or this 100 level, I think that, or sorry, 200 level, you'll probably get maybe like 196 before it bounces again. Yeah, so it's probably got another little leg up here, probably 215. Tesla, this one is a very nice bull flag. This one to me is pretty clear. We've got this. Oops, we've got this nice little setup here, and you don't really see high volume with this rejection from the 200 daily moving average. Yeah, I mean, you had a lot of selling before just randomly, back in earlier June, but it recovered pretty well. But you're still kind of in this bull flag territory. I mean, you can kind of see there's a lot of buy delta down here. So even if it only makes it up, like a 61% kind of retrace, that's still going to be pretty nice if you're long options or something like that, or TSLL, something like that. I'm actually going to set an alert because I would like to maybe add some more TSLL if we do get a smaller pullback. Let's say potentially like tomorrow morning. Okay, that's about it. Any questions, comments, concerns? I do not accept concerns.
On the Tesla long, are you thinking like that coincides with the move up in the indices as a short term?
I think so. Yeah. What's kind of weird about Tesla is I do feel like it's kind of disconnected from like from some of the other ones like like Microsoft and Google. Those charts kind of trade a little bit differently. And I guess the one thing I forgot to mention before, Jake, is when we're talking about the 1 second charts and stuff like that. For chart nerds, I guess I would say sometimes indexes or certain stocks, like they have like a certain feel to them. Like the Nasdaq trades fast, the S&P trades average, the Dow trades slow. Different stocks like Tesla is kind of erratic, but once you're on a good bull run, it's a nice bull run. So like different stocks have their own kind of different characteristics, but Tesla's been a little bit disconnected from some of the others. But I feel like it's kind of in isolation. But usually when you get a big buy day, everything's going up. But Tesla hasn't really kind of followed suit with that, only because, in my opinion, at least, you've been following like stocks. Like all the money is just being dumped into semiconductors. It doesn't matter what it is because that's the only thing that's pulling the market up. But everything else is kind of just meh. But Tesla's kind of in its own little island. So that's just my opinion, though. Any other questions?
There is bullish divergence on the RSI in Tesla, so I think it's actually like worth. I just want to time my options.
Yeah. Yes. I would say, I can't tell you what to do, but the easiest thing to do is give yourself more time. Like if you do 0 DTEs and stuff like that, you can have the right idea and the right strike, but didn't give yourself enough time. So like if something consolidates or trades sideways for a little bit longer, you could be in a situation where you've got, you're just stuck holding the bag with, deteriorating options, and you just need like 1 or 2 more days. Been there, done that, bought the shirt. So I guess I would say if you are going to try to do like options, like you can do like debit spreads, like I was talking about with shorting indexes. Those kind of debit spreads are nice because if you actually like if it does look like it's about to run, you can close the hedge side. So like if you let's say you buy a call at at 400, you sell a call at 410, and that removes your theta risk. So if you have like a 2 week sort of horizon, if the move actually materializes, you can close out that hedge. You'll have to buy it back and pay more money, so you got to have some extra capital laying around. But that's still a good way to at least like stop the theta burn for a while, and then you get that full exposure to just like naked call options. Kind of hard to do if you're not watching it all day, I guess, because if things do reverse, you can add the hedge back, you can close positions or whatever. But that's but if you're trading it longer term, that's at least something I've had success with in the past. Like if the trade can completely go against you, but if you keep selling calls and buying them back whenever you get some price movement, you can actually profit off those hedges more than the actual trade itself. So I mean, there's been a couple trades where I got into trouble and ended up doing better than break even. Not by much, but at least like lose the money. Whereas let's say you bought $10,000 worth of call options, and then they're just drying on the vine as everything melts down around it. So,
well, there is Vanna exposure on Tesla up to 500 for July 17th. So like a lot of concentration in that. So maps are pointing up right now. There's very little downside, maybe downside to 380. So in the near term, I think you're good for a long. I don't know, again, how long it'll take to materialize, though.
Yeah, and you also got to just be careful about what the indexes are looking like they're doing, because you could also see something like this where you get just a little bit of a pop from the flag, and then it just continues down like everything else. And I think this is probably, it's possible, sure. It's just that, you don't want to be greedy with the trade. You don't want to hold the trade until you get, it's just expecting it to go all the way up here. That's a great way to step away from the computer and then, have a very expensive bathroom break, where you come back in your position, you just gave $5,000 back to the market.
Yep.
So, all right. So I think I gotta wrap up here. I'm about out of time, but anybody else have any questions? Roll die. Any of you guys? Okay. All right, guys. Well, trade smart out there. Definitely, definitely don't overexpose yourself. If you're planning on shorting, give yourself enough time. Again, I can't tell you what to do. So if you want to get nuts with it, then have fun. But just use some stops. All right, and definitely enjoy the long weekend away from the monitor, because I will be. So, all right, everybody, thanks for joining. Appreciate it. I'm going to stop the recording.